I just took another liquidity trade right now. You can see on the ESI there are a lot of buyers stacked at the price range 56.48. Price came back to those area and then like a slowing down. The bet is really in terms of every trade is a bet based on the technical analysis and then the patterns in order flow and everything. Um, since there's a lot of liquidity, the it's very hard to break through every liquidity on the buy side. There are a lot of strong buyers control right here. You can see that on the ES, but on NQ we don't see much, but we do see some. You can see those. The first liquidity was gone. It's cleared after the grab right here, but still there are liquidity for the buyers side, buyers control. Uh, right now I'm expecting, because it's a lot of buyers. You can see right here. Let me maximize it. Even you can see in this section. You can look and see how much of the buyers in here and in here. That means they're interested in these price points for the buy orders or its limit orders right now. The chances of taking out all this liquidity is not that great. So unless otherwise there's huge number of sellers coming in to push the market down. So this is the ideal place for you to enter the trade to see whether the market is going to bounce back to the range in terms of as a long trade. That's what I took right here. We have to be patient and see how it's going to turn out. Okay, right there, okay, but it's just a little bit of move. I think I need to see a little bit more to make sure I can move my stop from here to break even. For now I need to keep the stop a little bit below, because this is still in the volatility range. Okay, but in the supply and demand system I can see at least like 5 bars right now, but at least it can go until what the last demand was here at 19627. So until here it should go. If it go until here, I will move my at least somewhere here. I will move the stop loss a little bit back up. Okay, patience, patience, patience. That's all it is right now. We need. Look at that. It's coming back to the liquidity. It took off the liquidity. You can see it took off the liquidity. It swallowed almost off the liquidity. Still there's some liquidity left on the ES side to grab. On the NQ side there are still some liquidity to grab. That's why I have a stop right on the liquidity. I think I should move it below. Hide the stop below the liquidity. Hide the stop below the liquidity, because if at all the price need to go through and take your stop, it need to go through these limit orders sitting right here. These limit orders sitting right here. That's the whole purpose of finding the entry. Finding the entry is just because there's a trend, we can't enter anywhere. We need a place where we can hide our stop. So when I say hide the stop, we need to hide behind the other buyers, other order flow, other orders sitting in the market to get stopped out. So that these are all the stop orders sitting in the market. I'm putting my stop beneath hiding beneath them, so that if at all I'm getting stopped, only after all those orders getting stopped. Okay. All right. So let's see. Is there any new buyers coming in? I think I can. I'm not sure. Let me zoom a little bit up. 529, 3420. This is very good numbers. It's not like usually in 200. It's 529. 529. Here, oh, this liquidity is gone, guys. We are not protected for the downside right now. So now our trade is little bit exposed. So this is very, very critical information. I was hiding my stop beneath this order flow, but the order flow stopped right here. That means they canceled that order or something. It is no more active. It's gone. So that means now I'm exposed unless there is new buyers coming in above my stop loss. We'll see. We'll see. Because I'm in the trade. I can close right now, but I don't want to. I can close right now because I'm not losing anything. Still couple of ticks above my entering the price, but still I'm going to, since there is not much, I'm going to tighten my stop because there is I'm a little bit exposed. All the liquid is gone. I'm relying on the ES side liquidity. I think ES side liquidity is still there, right? So you can see ES side the liquidity is still there, but the 500 is gone now. I think it's now back to highest number is 300s, in 300s highest number is. It's not like this is what you need to, just because the entry is done, you need to watch how the order flow changes. Right now there is no order flow that can support my stop, because look at this, there is no buyers orders, everything, the green stopped, all the green stopped. That means there is no buyers control. The next buyers control is right here. That means I am completely exposed with my stop. There is nothing can stop the market price action to come back and take my stop, because all the order flow that I relied on to take the entry, those are vanished, those are stopped. Okay, but still the reason I'm in the trade is because on the ES side I still do see the bias control that did not go away, even though NQ gone, but ES still I see those things. Now it back up to 480. Some of the numbers are 480, 429. Those are good numbers, but it's a little bit far away on the all the way down at 51 to 48. Okay, but something is better than nothing, because if I don't have any of this, that means I should not be in the trade at all, because there is nobody can protect my stop. Look at this. Always look at the big picture. We took this trade because the price came back to the buyer's strongest buyer's control, and then it took away off the liquidity. It took away off the liquidity, guys. Okay, so look at this. Let me zoom out the more greener, more lines, more. Look at this. How much order flow is stacked up in this particular price point. Okay, that's why I took the long trade, but still price is not moving up. There is no new buyers coming in. That's what it means. There are buyers entered before, they are holding the trade, but there are, okay, now maybe oh, look at this, 514. I'm not sure you can see it or not. The number 514 at 531. More order flows coming in. The same concentrated buyers that price line. That's a good news. I don't see anything in NQ yet. But it's a good sign is that I see the 515 contracts limit orders sitting right here. That means this is a very good buyers control building up. The higher the numbers, more order flows, that stronger it become. Okay, that's why this price point still valid, even though I don't see anything here. ES and NQ is a mirror image of price movements most of the time, so I'm still going to be in the trade based on the ES order flow right now. Let's stay in there. You know what, for now I think I need to find a time to perfectly to move my stop back into the price line, because I don't want it to get stopped out. Or maybe now. The reason I'm hesitating, because even though I have a good margin, if you move your stop from here to your break even early, always think about it. Oh, it's good news that we have blue bar from order flow zones. That's a great news. I want to see at least 2-3 green bars. I don't want to see one more. Okay, so I don't want to see any yellow or red. I want to see, if I'm the long trade, I want to see the blue bar. Look at this. This till now from here almost like 11:49. Now it's like a 12:20. There are no blue bars. Everything on the bearish order flow. First time right now we see the blue bar, which is order flow zones indicator, telling the first sign of bullish momentum. Okay, so but one doesn't cut. We need to see at least 3 or 2. Otherwise it can go back. It will be just a pullback. It can go back into the range. But either way, we are safe because my stop loss is above my entry price. That means even if we come back down and take my stop, hit my stop, I'm not going to lose anything. Okay, so at this point, we just need to be patient in terms of, I can see the order flow 532. See this 532. 532, still the bias control is really solid. Okay, really solid. Okay, if I don't see anywhere, I think ideally I would like to take when I see on the bias control on both NQ and ES. That's why when I took the trade right here, I saw this one building up and then I saw it building up here. That's why I took it. But after some time, those two are NQ liquidity was gone, completely vanished. That exposed my stop, but I still stayed in the trade because I see on the ES side strongest bias control right here, right? So you can see everywhere there is a control. You can see the market is like pushing back up. All right, so now we see 3 bars on ES also, 3 bars on ES and in after long down movement, all reds and yellows. Now I start seeing the blue order flow zones telling me there is a little bit of sign for the bullish order flow. You know what, you see this one, even though it's like showing the red, the best way to handle is go to the indicators and then where is it? Sorry, it took some time to open, maybe it's busy. Okay, order flow zones, I'm going to change it as at price change. I want algorithm to find the momentum while the price movement. Okay, it's been back to calculating. All right, it closed at red bar, guys. From yellow, blue, went back to red, went back to red, went back to red. That's not a good sign, but we have some cushion to play with. We'll see. Okay, while this trade is playing out, let me try to explain something more important for you guys to understand. So let me zoom out, zoom in. I'm going to a little bit, I want to see the trade, that's why. It's coming back to hurt me. Alright, let's do this way. Okay, it's coming back down. It's coming back down. I'm gonna get stopped out. I am gonna get stopped out. Very close. Can it just bounce before my stop? Because market cannot go in the straight line. It has to pull back and then go. The problem is if it pull backs below my price and go up, I'm gonna get stopped out of the trade, and still it will go up. So, well, why? This is what I wish for. Pull back just up. Okay, that's pretty good. That's pretty good. That's pretty good, guys. I'm going to lock in some profit here. Okay, lock in some profit. Lock in some profit. All right. Look at that. You know why? Maybe you can't see it in NQ, but you can see it in this. Why it came down, took this liquidity. It's a small green liquidity. Look at this. Took the liquidity and then pushed back in. Pushed back in. I think it's okay. It's okay. My point is, the reason I wanted to show something I want to show you is that the day like this, okay, that's okay. I'm going to get stopped out. That's good. Still, it's a very good profit. So let me try to explain the trade, why that trade. Since morning, market is not really moving a lot higher or a lot lower. It's not a choppy, but little bit of momentum to the upside, right? But I want you to remember one thing. When it comes to those days, market always goes towards the liquidity. Okay, let me explain, but remember this line. Market always tend to move towards liquidity. What do I mean by this? Look at the price action. Okay, it started from here, it took this liquidity, came back down, went to this liquidity, went back up, took this liquidity, make it disappear, and then what happened? It took this one, took all this liquidity. I did take this trade actually, but came back down to this liquidity, went back up to this liquidity, came back down. This is like liquidity grabbing on both edge every single time. Market makers always want liquidity to do the order matching as well as to fulfill all the orders. But the idea is every time the market goes, it will always take the liquidity on one side, move to the other side, take the liquidity, go to the other side, take the liquidity, move down, take the liquidity. So that's the pattern. 1, 2, 3, it's all gone, take down. See this one? Take the liquidity, taken the liquidity. Look at this, it took all the liquidity, came back down. Okay, again look at this, there's a huge buyers limit order sitting here. After taking this liquidity, came back down, took liquidity exactly, it didn't even add one more price. Take the liquidity, went back up, and then what it do? It went back down, took off of the liquidity. It could not take everything because it's so much of concentration. That's why I took this trade, because I know if it is another liquidity grab, it's a fair chance that it cannot just go down further because it's very much higher order flow. Look at the number of lines, number of order flows sitting right here. That's why I knew that it's not easy to sellers to eat all this liquidity. That's why I entered the long trade and then I exited somewhere here. Okay, my one thing you can take away from this video is to understand the days is not choppy or like indecisive days like this. Market always goes towards liquidity on one side, grab the liquidity on the other side, go back up, go back down, go back up, go back down. These swing points are always those of the liquidity zones, highest liquidity areas. Okay, this works only on the indecisive or choppy days like this, but on a trending day, entirely different game. We'll talk about that in another live trading video. Hope it helps. Remember, market always goes to the highest liquidity area to grab it and then move to the opposite side of the highest liquidity again. Have a great day.